Our wonderful pilots are above Tehran. Tehran is burning.
Without a doubt, the scope of the devastating response by the brave Iranian fighters will encompass all areas of the occupied lands.
It's time for a deal, and we'll see what happens, but sometimes they have to fight it out.
This is Horizon's Middle East and Africa, our top stories this morning. Oil and gas prices rise again as Israel and Iran continue their attacks on each other, with the market bracing for any disruption in supply. President Trump vetoes an Israeli plan to kill Iran's supreme leader, but says it is possible the U.S. could get involved in the conflict. It has just gone 8 a.m. across the Emirates. I'm Johanna Bersetchi in Dubai, heading into a fourth day of attacks and counterattacks between Iran and Israel. That is the focus for the region and indeed the entire world. So let's get straight into the show, picking up on some of the market action. We did see Wall Street drop towards the close on Friday, but as you can see behind me, futures are leaning towards the green this morning. Some price stability coming through, up about 0.1%, though we did see dips of north of 1% on the Friday close. European markets also look like they're going to be opening up in the week, down 0.2%. But the handover from Asia Pacific as well, moderately positive too. We're going to be speaking to Avril shortly. Some better retail sales figures coming through from China. But one thing that our colleague David Inglis was flagging is even though we're seeing moderate price action, what we are seeing is very thin exchange of hands, actually. So liquidity and actual volumes are pretty low this morning. So interesting to note that there isn't a lot of trading going through as we speak about the handover. But let's switch over to cross-asset. Take a look at oil this morning. Last week, a huge jump on Friday after the news came through of the initial Israel attack on Iran. At one point, oil was up more than 10%. We ended the day about 5% higher. But this morning, you can see that Brent is trading just shy of $75, up 0.8%. Though for the week last week, up 13%. Gold, once again, getting close to record highs. Safe haven money pouring in to gold, as you can see, getting close to $3,500. The USD, this is interesting to note because a bid has come into the USD. It's up 0.2%. And this, despite the fact that for months now we've been talking about the dollar perhaps losing somewhat of its safe haven status and the fact that U.S. exceptionalism has been tested. But indeed, in times of major geopolitical episodes, money has gone back into the U.S. dollar. And then take a look at 10-year yields, 4.4% we have right now. We're up about 3 basis points on the session today, 10 basis points on Friday. And we're heading into a big week. Don't forget, plenty of central banks, including the Fed, are making their decisions coming this Wednesday. Whether or not they'll have to factor in the recent uptick in the price of oil, what that could mean for inflation into their forecast is a question for investors. But let's switch on and talk about the handover from Asian markets. Avril Hong is in the Singapore studio. Avril, just walk us through the price action this morning.
Yeah, Jumana, Asia's stocks are flat both in terms of price and volumes as investors weigh out the extension of the Israel-Iran hostilities. We are seeing energy stocks, unsurprisingly, those are the outperformers in the region today. I would also just note that when it comes to the Japanese yen, which initially caught a bit of a safe haven bid as the hostilities broke out, it's now being weighed down by the concerns about how global uncertainties could push further back some of these BOJ rate hikes. Keep in mind the central bank does meet this week. Now, aside from that, we are seeing the Japanese equities more or less outperforming, but Chinese stocks, despite that retail sales big beat, they are flat today, as some of our colleagues at Bloomberg Intelligence have called it a retail boom on the subsidy steroids that may not last. Investors want to see more signs of a sustained recovery in China, and amid that, not that much appetite for Chinese stocks at the moment.
Avril, thank you so much for the overview. Avril Hong in Singapore. Now, open hostilities between Israel and Iran have entered a fourth day as fears grow of a wider war in the oil-rich region. The conflict has resulted in significant casualties and damage, with 224 people killed in Iran and 14 people dead and around 400 injured in Israel up until now. The figures have not been updated yet. So now let's bring in Bloomberg's Dan Williams from our Jerusalem bureau, who is in London still. Dan, for obvious reasons, you can't get back to Jerusalem. We are entering into a fourth day of this conflict. The attacks and counterattacks are continuing between Iran and Israel. No real sign of de-escalation at this point.
Indeed, and it's really hard to tell where it's leading. This was begun by Israel with that surprise set of airstrikes on Friday morning. We're now into a new week, well into a new week, and it would appear in the absence of an agreed negotiated nuclear deal between Iran and the United States, one which President Trump, Prime Minister Netanyahu would want to see ending Iran's uranium enrichment program completely. This is the military alternative. In fact, the Israelis have said quite openly that among their targets have been hard nuclear sites that they've effectively taken out of the picture with high ordnance, with high explosives, in the absence of a negotiated deal.
Dan, let me ask you about what the Israeli public are saying. And again, we were just showing some images there of some of the damage that has been sustained to buildings. And even though most of the missiles and drones have been intercepted by Israel's very sophisticated air defense systems, some of them did manage to penetrate. And you have Israeli civilians moving towards bomb shelters and the likes. The number of death, the death toll continues to mount as well. What appetite is there from the Israeli public to engage in yet another front on this multi-front war that has been going on since October 7th?
It's an excellent question. We at Bloomberg are expecting the first public opinion poll today that might give a hard register of where the sentiment is, the public sentiment in Israel. Given more anecdotal evidence, and I'd recommend my bureau chief's story on this of yesterday, it would appear there is wide support, while, as you noted, the scale of the damage is pretty much comparable to the Gulf War of 1991 in terms of entire buildings being taken down, entire neighborhoods scarred by very large missiles, some of them carrying half-ton warheads. This isn't a surprise. It's worth keeping in mind that this is no weekend war between these two regional adversaries. This is actually coextensive with the now more than 20-month-old regional war that began in Gaza with the Hamas attack of October 7th, 2023. So on the face of it, strategically, Israelis are not surprised. Obviously, they, like everyone else, especially Iran, were surprised by the outbreak. Israel achieved pretty much total tactical operational surprise then. For now, we're only 3 or 4 days into this. I think the Israelis feel that their forces still have the upper hand against Iran. They probably feel that this is justified given an Iranian nuclear program that going back 20 years, Israeli leaders have described as an existential threat to Israel that must be stopped. So for now, I imagine they're rallying to the government and to the military.
Dan, thank you so much for the reporting. Let's continue the conversation now. Joining us is Niamh McBurney, Control Risk Associate Director. Niamh, first of all, Dan was just talking about the element of surprise with the attacks that Israel conducted on Iran early Friday morning. And of course, now we know that it had been months of planning into that event. And indeed, the Israeli Prime Minister had been saying for a while that military action would be an option, and they went for it. But still, it did come as a bit of a surprise. How do you read the intensification of attacks and counterattacks over the course of this last weekend, and indeed the broadening out of the scope of targets to include, in some cases, energy infrastructure as well?
I think it shows the seriousness with which both sides are entering this conflict, and this isn't going to be something like April and October last year, where there was a kind of brief back and forth. That this is really the moment at which Israel has an opportunity itself to be able to counter what it considers an existential threat from Iran, and obviously Iran has to defend itself and counteract that as well. So this is really an incredibly important moment in regional politics.
Do you think, from Israel's perspective, this is about eliminating Iran's ability to produce a nuclear bomb, or is it actually one step further and a real possibility for regime change? So
there's 3 parts. 2 of them are the 2 that you mentioned. There is a third, which is that Israel uses its targeting of economic assets, potentially social and political, to create enough political instability in Iran that then can eventually lead to some sort of political change, maybe even regime change. although there's been some commentary overnight from Netanyahu himself on what Israel's intentions are, they aren't actually clear. And I think it's important for us to remember the Lebanon conflict, just a couple of months ago, where Israel was strategically ambiguous in what it wanted from the conflict, which gave it flexibility to be able to end the war when it wanted. And I think there is a component of that in this as well. I'm sure there will be, within the IDF, very clear strategic aims, but they're not making them public because it will give, politically and militarily Israel the flexibility to be able to decide to end the war when it wishes.
Under what conditions do you think Iran would actually go down the extreme option of closing down the Strait of Hormuz or causing a severe amount of disruption through the Strait of Hormuz?
Only if it viewed the attacks that it was under and the extent of them as a truly existential threat. Your viewers must remember that, of the 4 million barrels of crude that Iran produces, 50% of it is exported, 91% of that goes to China. The Jask terminal isn't yet functional. Only a very small amount of it is. So if Iran closes off the strait, it closes off its own revenue generation, about 35% of the budget for this year. And that's really important that it doesn't do that because it's going to need all the money it gets. So it's only in the absolute worst case scenario that it might do that.
Can I just go back to what you were saying about it? It would only do that if it were deemed to be under an existential threat. Is it not under an existential threat? The reports of the weekend suggesting that Israel did have an opportunity to assassinate the supreme leader and that the U.S. vetoed it. It's now being denied by Israeli press from the Israeli side. But they've taken out senior RIGC commanders. They've taken out key nuclear scientists. How is this not an existential threat to Iran?
It's a very, very serious threat to Iran, but Iran still has institutional capacity within it. Almost all of the people who were, affected by targeted killings have been replaced. Even those in very, very senior roles. There are a couple, Ali Shamkhani, for example, who hasn't yet been, but he will be in time a close aide to the supreme leader. Not enough people have yet been targeted where there is a moment of true vulnerability for the regime. We are still some time away from that, so there's still some time left to go.
What would need to happen for the U.S. to get involved in this war in terms of aiding Israel with the attacks as opposed to coming to Israel's help in defense?
That's an excellent question. I think there would have to be successful targeting by Iran of strategic assets to Israel. The fact that the Haifa refinery, owned by Bazan Group, has now been targeted twice in the last 48 hours is significant. But again, it's only been slightly damaged as far as we can tell. I think it would be more focused political targets being hit by Iran that would show more vulnerability than Israel has shown so far, that would probably prompt the U.S. to react.
Yeah, Niamh, sensitive times. Thank you so much for giving your perspective on the latest. Niamh McBurney, Control Risk Associate Director. Well, still ahead, investors are moving cautiously as tensions rise in the Middle East, pushing oil prices higher. Wealthbrix Capital Partners Limited shares their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stocks in Asia rose on Monday, driven by better sentiment in Japan and a positive data surprise in mainland China following a weekend of escalating conflict between Israel and Iran. Joining us now is Anita Krishna Gupta, CIO at Wealthbrix Capital Partners. To what extent do you think the conflict in the region is going to impact sentiment for global markets? We saw a bit of it on Friday, but is this going to be sustained, do you think?
Good morning, Jumana. So what I think is going to happen after we saw a little bit of a knee-jerk reaction on Friday, of course, on the back of higher inflation, higher oil prices, this has also created uncertainty. So first we had uncertainty created by tariff rates, which would affect global growth. And now we've got this added uncertainty around the geopolitical conflict at this moment between Israel and Iran. How this pans out is where we think markets will get placed. Companies don't like uncertainty because they're not going to invest more. We're also seeing some amount of trade disruption that happens when these kind of geopolitical conflicts occur.
Yeah. What about one thing I picked up on when I was doing climbing my walls in the morning was the flight to quality and the fact that USD, the greenback, actually got a bid this time around. Remember, we were saying the last couple of months, during risk off, it was interesting that people were shying away from the US dollar. This episode is different. What do you think that tells us about the dollar and its relative position amongst currencies of the world right now?
We are still a little bit underweight the dollar. We think that there is going to be a little bit more depreciation on the dollar. There was a very small upward movement for the dollar, which we saw on Friday. We're not seeing that, this morning. Again, we have not seen the dollar as the safe haven asset this year at all. It's been a little bit more of the Japanese yen, gold, of course, and we think that's going to continue. We see the dollar, two reasons. One is, of course, the fiscal deficit in the U.S., and secondly, U.S. exceptionalism losing out, and rate cuts should start to happen.
Gold approaching $3,500. You still own it here?
We do still own gold, and we've seen central banks buying a lot more gold.
Yeah.
Expect that to continue. Again, it's an alternate currency to be kept as a reserve by central banks.
So we've got the Fed meeting coming up this week as well. The market is pricing in about 50 basis points of cuts this year, and I do wonder whether the Fed may have to lean a bit more hawkish given some of the potential upside that could come through either on back of the tariffs or on back of this latest uptick in the price of oil. What is your expectation for the Fed this week?
So two factors here. One is global growth. We've seen downward revisions, whether from the World Bank or large sell-side analysts. Growth is definitely a factor which the Fed would look at. Secondly, is inflation numbers. Inflation numbers are very much in line. The CPI headline and core that came out for the month of May. Oil prices are higher. However, the Fed is behind some of the other developed market central banks in terms of cutting rates, definitely behind the ECB, behind some of the emerging market central banks too. We've recently seen India cut 50 basis points. So if they want to boost growth, I think a cut is necessary, but we think that it's going to be two cuts this year, maybe later in the year. But let's see if the geopolitical tension has escalated any kind of hawkishness on the Fed.
Yeah, how do you read the signals coming through from the U.S. economy right now? Can the Fed justify cutting interest rates? Because it doesn't seem like the justification is there from a fundamental perspective. Obviously, President Trump wants them to cut rates.
Yes, so absolutely. So which is why we are seeing Chair Powell kind of holding off, watching the data. So you've got a mixed bag here. As I said, you've got growth slowing expectations. But for 2026, it's an upward tick on growth. So it's 2025 that gets a little bit lower, below the 2% handle. But in 26, the projections are again for growth to go up. And when you're looking at other data, whether you're looking at the performance of industrials, again, it's been very positive this year. If you're looking at the rhetoric of companies, what they're not talking about any slowdown in growth or any lack of consumption. So the Fed has a mixed picture to look at, and of course some pressure from President Trump.
Just to round it up, given the geopolitical risk and how much it's centered on right now the Middle East region, the potential for the U.S. to get involved, so there's always that element as a knock-on effect. Does that put Asian markets, investment opportunities in a better light, just purely from a geopolitical perspective? Do you want to get exposure to China?
Absolutely. We are neutral China only for the reason that we have not seen absolute transparency there. But what we are seeing is the earnings yield for China is going up. Any domestic economy is going to do well this year on two factors. One is they're not that affected by trade tariffs. Number two, they're not so affected by any disruption in trade because of what's happening geopolitically. Hence, Asian economies are largely domestic, and which is why we do see some uptick and a preference.
Anita, always good to chat to you, especially on a day like this. Anita Krishna Gupta, CIO at Wealthbrix Capital Partners. Coming up, East African finance chiefs are boosting their planned spending to sustain economic growth and mitigate the effects of geopolitical risks. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumana Bersachi in Dubai. East African finance chiefs have increased planned spending to a record to sustain economic growth and mitigate the effects of geopolitical risks and cuts in foreign aid. For more, Bloomberg's Ndiro Ganga joins us now from Kigali, Rwanda. Ndiro, why are we seeing these changes to the government spending plans and increased amount of money that is set aside for these budgets that seem to be getting bigger?
Jumana, so all the 4 finance ministers were in agreement that when they need to spur economic growth in the region, growth has been a little bit slow than they had projected, with the exception of Rwanda that has been growing slightly faster than their peers. And also, international risks are beginning to unfold locally. You have geopolitical tension, trade wars, Trump tariffs, and they're just trying to ensure that they insulate their economies right before they begin to feel the impact of this. And all the 4 countries plan to increase spending by $5.5 billion across the next 12 months. Rwanda is planning to increase spending by 21%. A large chunk of that money will go into building the Bugesera International Airport and also expanding the national airline. Kenya's budget, $33 billion, which will increase budget deficit to about 4.8% from 4.5%. And you also have Uganda, ambitious budget, $20 billion, and Tanzania, $21 billion. And what will be interesting is the approach that all countries are taking to raise revenue. You have Tanzania that announced plans to mandate mining companies in the country to trade and refine at least 20% of their total gold output in the country. And Uganda is looking for revenue influx from coffee, cocoa, and also gold. But interestingly, they will be getting access to World Bank funding after they had been previously frozen out due to their harsh anti-LGBTQ laws. So this is some of the ways that they're going to raise revenue. Growth projections a little bit moderate at 5 to 7%. But then again, the risks still remain, and they'll be watching out for those.
Ndiro, it's interesting to know that they're also allocating a lot more to health. Walk us through why.
Jumana, yet again, the effects of scaled back funding from global partners is beginning to unfold. Tens of thousands of healthcare workers have lost their jobs. Critical programs and institutional memory could be in jeopardy, and 17 million people who live with HIV on the African continent could lose access to life-saving medication. And that is why we're seeing most of these African countries ramping up their resources and pumping money into the healthcare system, because experts are warning that if the intervention is not swift and targeted, then the continent risks losing all the efforts that it has put in place to mitigate HIV and AIDS-related deaths. You have a country like Uganda that has earmarked $32 billion. Tanzania is also disbursed a little bit of that amount, about $31.8 billion. And Kenya will be giving $134 million to Global Fund to fight HIV, tuberculosis, and malaria on the continent.
Bloomberg's Ndiro Ganga in Kigali, Rwanda. Thank you so much for the report. And coming up, the IAEA says Israeli airstrikes damaged a key Iranian nuclear facility. We look at what this means for Iran's nuclear program. All that discussion next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Oil and gas prices rise again as Israel and Iran continue their attacks on each other, with the market bracing for any disruption in supply. President Trump vetoes an Israeli plan to kill Iran's supreme leader, but says it is possible the U.S. could get involved in the conflict. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Bersachi in Dubai, keeping you up to speed with all of the developments over the last couple of days, and indeed an intensification of strikes and counter-strikes between Iran and Israel. Though today the reaction in markets is a lot more subdued than what we had on Friday. But let me just take you to some of the local markets. This was the close. The Egyptian index closing down 4.6% yesterday. It opened down 7% weaker. Interestingly enough, the Tel Aviv stock index actually closed marginally in the green, up 0.5%, though some of these other indices, the Tadawul in Saudi Arabia down 1%, Qatari index down 3.2% as well. So this tells you that many of the regional bourses have also been reacting. No surprise that the reaction has been negative once open for trading yesterday. They opened for trade on Sunday, of course. Flipping over global markets, and you can see that today mood is somewhat more subdued. So we've got S&P futures basically trading flat, up about 0.1%. USD, some money's going into the green haven on back of a flight to safety in these times of heightened geopolitical stress. Brent, you can see, also up 1.2% today, just above $75. And this after a massive jump in the price of spot on Friday, with 1 point Brent trading around 12% higher, ending the day about 6% higher. For the week, 13% higher. Concerns about whether the scope of the attacks from both sides could spread more and more into energy infrastructure. And of course, the Strait of Hormuz has been a focus. And then gold getting close to all-time highs once again, 3,430. We are up for the week around 3%, so very close to 3,500. All right, let's talk about the handover from Asian markets as well. Avril Hong is in our Singapore studio. Avril, walk us through the reaction and handover from these Asian bourses today, please.
Yeah, Jumana, Asia stocks are flat as investors weigh out the extension of Iran-Israel hostilities, but also highlighting what we're seeing in the FX space. We saw initially, after the conflict broke out, the yen catching a safe haven bid, but it's since been weakening along with the jump in oil prices. Remember, the Japanese are net importers of the commodity, and we have the likes of Nomura highlighting that we could see, if the conflict worsens, the Japanese currency falling to as low as 147 against the greenback. Also keep in mind that when it comes to the renminbi, yes, if you're looking at the CFET's basket, that is the other major currencies that the Chinese yuan is tracked against, it clocked a decline for the week, but we also had those signals from the PBOC today that dollar yuan fixed below the 718 handle, I should say, which signals that even amid all these oil market gyrations, they want to keep the currency stable. That's the message they're sending to FX traders. Jumana.
Avril, thank you so much. Avril Hong in Singapore. Now, Israeli airstrikes have damaged a key Iranian nuclear facility, likely setting back Iran's uranium fuel cycle by months. The UN atomic watchdog says the strikes against the facility at Isfahan resulted in serious damage. For more, let's bring in Jonathan Tyrone, Bloomberg's atomic diplomacy reporter. Jonathan, I think all of us are trying to get our head around the various nuclear facilities and sites within Iran. But let's just talk about the damage leveled at the Isfahan facility. There have also been attacks on Natanz as well. How much of a setback does this constitute for Iran's nuclear ambitions?
Well, it's a very serious one. Everybody likes to talk about uranium enrichment. That's the back end of the nuclear fuel cycle. But what people have to understand is this is a vast industrial enterprise involving dozens of different sites. And whereas Iran has multiple enrichment sites, it only has one conversion site. This is the place where raw uranium is taken. It's injected with fluorine in highly specialized blast furnaces. It's a very complicated and corrosive industry. And without that feedstock, the so-called uranium hexafluoride gas that's enriched, Iran has a limited feedstock now of uranium that can be further enriched for nuclear fuel. So this is the first significant setback, we could say, for the Iran nuclear program. It will take months, at the very least, to repair.
What about the Fordo nuclear site? Because as we understand, that one is heavily buttressed by walls, very difficult to get to. And in that case, for Israel to sustain or actually to execute a significant amount of damage, you would actually need to see cluster bombs. So what do you think is the likelihood that actually the more deeper embedded uranium enrichment sites will be harmed in these attacks?
Well, attacking Fordo with cluster munitions is impossible. It's buried a half a kilometer beneath a mountain. We've even seen it in Natanz, which is a much easier fortified site to attack. That's only 40 meters underground, reinforced with steel and concrete. Israel has not been able to breach the primary containment for those enrichment hulls. So the further down you go, the more difficult it becomes. Fordo is a whole different order of magnitude, and it's highly unlikely that with the kinds of munitions that we've seen so far, Israel is going to be capable of penetrating that deep below. And, you know, it's not just the factor of interrupting the enrichment at that point. It's also a matter of the stockpile, because that's where the 60% stockpile of highly enriched uranium resides. Iran announced yesterday that it was curtailing information sharing with the IAEA, the International Atomic Energy Agency, whose inspectors remain in Tehran. So, you know, this is a conflict that has significant way to escalate.
Jonathan, we'll leave it there. Bloomberg's Jonathan Tyrone, thank you for getting us up to speed on some of the action that has been taken on those nuclear sites. Let's bring in Dr. Meir Javedanfar, Iranian-Israeli lecturer at Reichman University. Good morning to you. Thank you for joining us. I know you are in Tel Aviv, very sensitive times. Let's just take a step back and talk about the attack that Israel conducted on Iran early on Friday morning. We now understand it had been months in terms of preparation for that operation. What is the objective of these attacks? Is it to ensure that Iran doesn't develop a nuclear bomb, as we were just talking about with my colleague, or is it one step further and the real possibility of regime change in Iran?
I think there are at least two major strategic objectives that are also very realistic for the state of Israel that its leadership is following in Iran. In order of importance, the second most important strategic objective is to exact a very heavy price from Iran by attacking military sites, economic sites, and nuclear sites, and also by attacking and eliminating the leadership level of all these industries, and of course attacking energy infrastructure, in order to deter Iran from the continuation of its anti-Israel policies. Jumana, I'd like to remind your viewers that since 1991, the Islamic Republic of Iran, just before the Madrid Peace Conference, declared proxy war against the state of Israel, and stated that it's willing to help anybody who wants to torpedo the peace process. Since then, we've seen, before October 7th, more than 1,000 Israelis killed in buses and cafes by Iranian proxies. Therefore, and then the situation got far worse after October 7th. So one of the goals is to exact such a heavy price that Iran will change its policies in the future because of the costs that they carry. The first and most important strategic objective is to force Iran to accept President Trump's terms for the nuclear agreement, which Iran has not until now. And the most important term is the complete disintegration of Iran's enrichment program.
Okay, so let me just ask you about that last point, the complete disintegration of the nuclear program. I was just speaking to our colleague now who was saying that, you know, one of the main nuclear enrichment sites in Faro, you can only get there by using bunker buster bombs, and that would entail U.S. involvement. Is Israel therefore relying on the U.S. to finish the job, so to speak?
I think in an ideal world, yes, but realistically, I don't think that's going to happen. I think this is a partnership between Israel and the U.S., where the United States gave the permission for such an attack. This was fully coordinated with the Americans, but it's Israel that's doing the military work, not the Americans. President Trump does not seem to wish to, at least for the moment, to risk the lives of U.S. service personnel. So this is a situation. This is an undertaking by Israel, but the goal is, if Israel, by through these attacks and the price that they carry, convinces the Islamic Republic to accept President Trump's nuclear agreement, then these sites will be dismantled, and perhaps Israel won't even have to attack them, because once you reach an agreement, you can send inspectors, you can send specialists to these sites, and you can dismantle the centrifuges and all the infrastructure that is involved.
Can I ask you how much of the timing is coincidental with domestic politics and the fact that the Prime Minister himself, Netanyahu, was getting very close to perhaps losing his seat in a vote that took place on Thursday last week? The same evening, of course, Israel then conducted those strikes. How much of this is about Netanyahu ensuring his own political survival and launching yet another front in this regional war?
That's a very good question. Yes, Prime Minister Netanyahu is doing very badly in the polls. And of course, in his legacy so far, he has the terrible tragedy of October 7th happen under his premiership. There's a lot of opposition in Israel. Every weekend, there are massive demonstrations against the policies of Prime Minister Netanyahu. But Jumana, when it comes to the threat posed by the Islamic Republic of Iran, the state of Israel is united. The opposition is united, standing behind the Prime Minister. Because this is a war that the Islamic Republic imposed on us, not the other way around. Since 1991, the Iranian regime has been paying different groups, Hezbollah, Hamas, and Jihad Islami, to kill Israelis. 2 days after the October 7th massacre, Ayatollah Khamenei praised those who carried it out by stating that the arms and the forehead of its planners should be kissed. Then he invited the Hamas leadership. This is a threat that is one of the issues that is bipartisan in the state of Israel. And these days, there are very few issues that are bipartisan. And one of them is the threat posed by the Islamic Republic of Iran.
Dr. Meir Javedanfar, really good to have you on the show today. Thank you for bringing in your perspectives. Iranian-Israeli lecturer at Reichman University. Thank you. And coming up, UAE luxury real estate developer Binghatti launches an asset management arm. Chairman Ahmed BinGhatti joins us next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. UAE luxury real estate developer Binghatti has launched an asset management firm with the aim of managing $1 billion worth of private credit and real estate strategies. The new Binghatti Capital is based at the Dubai International Financial Center, DIFC, and its chairman, Ahmed BinGhatti, joins me right now. Good to have you with us on the show. The asset management firm plans to target about $1 billion in private credit and real estate strategies. These are Sharia compliant. Why did you launch Binghatti Capital? What's the purpose of the funds?
So we wanted to obviously diversify capital sources. And the aim is to create a product offering of around $1 billion. It's also to give people access to the Binghatti story and also enhance liquidity and access to alternative sources of capital for the real estate supply chain. And finally, we like to think of ourselves as a key player in the real estate sector in Dubai. So we like to think that we're obviously doing something to achieve the or participating in achieving the Dubai Economic Agenda 2033, which aims to reach 1 trillion dirhams in real estate transactions.
What sort of investors are you targeting to invest in this fund?
So obviously we're regulated by the DFSA. So the kind of investors that we're looking to attract are qualified investors. I would say investors like institutional investors, high net worth individuals, as well as family offices.
Do you have any plans to launch a REIT? We know that Dubai Holding recently launched one. Is that something that you would aspire to do as well?
I think for the time being, we are launching things to do with real estate and private credit strategies. A REIT per se, I can't comment on it right now, but I think for the time being, it's more classical forms of or strategies to do with a classic private equity style.
So what are some of the best? What are some of those opportunities that you see the best opportunities in this space?
Well, from our conversations with investors, we've gauged very, very increased interest in private credit. That's a very nascent asset class in the region, so there's particular interest in that. That's something that we'll be focused on very much going forward, and also more traditional forms of strategies or vehicles, let me put it this way.
Yeah, I guess people would be asking why a real estate company or luxury real estate company might have an edge in private credits when there are so many other players involved as well. What is your response to that?
So obviously, being one of the forefront developers in the real estate sector in Dubai, that kind of exposure gives you a lot of, let's say, unique experience and insight into the real estate sector, and that places us at an advantageous position to know where the value lies in the supply chain, whether it's, construction companies or key suppliers or property management companies. We're probably the best positioned to know where the value arises, and so when we're taking those decisions on where to allocate or deploy the funds, we know, we're at a really good position to know where or which of those companies is best to invest in.
Yeah, and you say the real estate property developer, but of course it's luxury. Your focus has been on luxury. And can I just ask you how you see the market from here? Because we're hearing of signs that things are beginning to soften. Are you seeing that actually translate?
No, not really. I mean, I think one very important distinguishing, feature that one must make when it comes to supply. I mean, there's always talk of, is there oversupply? But people fail to look at supply in terms of theoretical supply and realistic supply. Theoretical supply being, the announcement of projects. It's always easy to announce projects, but in reality, to come and execute those projects is a lot more difficult. So I think that the realistic supply is still lagging behind the theoretical supply. I mean, in addition, I think the fundamentals are very strong still in Dubai. We know that we have a projected 4.6% compound annual growth rate when we're talking about the population over the next 15 years. Dubai continues to attract millionaires and the affluent from across the world. Only in 2024, 6,700 millionaires settled in Dubai. What's very, very positive and encouraging also is the Q1 figures from 2025 that came from the Dubai Land Department, and they're pointing to 45,000 plus transactions only in Q1. That's a year-on-year increase of 22%. The corresponding figure for that is 147.2 billion dirhams, which constitutes a 30% year-on-year increase from 2024. So, with these solid, fundamentals, I don't think we're really worried about things, cooling down, or we don't see signs of that, really.
Okay, that's a good place to leave it. So outlook's still robust then. Ahmed BinGhatti, Chairman of Binghatti Capital, thank you so much for joining Horizons today. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, we are live at the Paris Air Show as the Air India crash and the widening war in the Middle East will dominate discussions. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersace in Dubai. Well, the Paris Air Show is usually a hub of blockbuster deals, but this year there's a more somber tone following the fatal crash of Air India's Boeing's 787 and ongoing strikes between Israel and Iran. Guy Johnson is there for us in Paris. Guy, I've got to think that safety is going to be front and center in terms of what people are going to be discussing at this week's Paris Air Show, and perhaps even more so given the Air India flight.
Absolutely. What happened in India is going to cast a very, very long shadow, Jumana, over events here at the Paris Air Show over the next few days. We were expecting that there was going to be a series of significant announcements. I suspect that maybe some of those will be put on pause as a result of not only what's happening with the Air India crash and the ongoing investigation, but also what is happening in the Middle East as well. I suspect some of the big Middle East carriers that were due to be announcing deals, not all, we are expecting some deals to be announced here for large aircraft orders, but some of those may have been pulled. But Kelly Ortberg, the CEO of Boeing, who was due to make his first appearance, his first trip here as CEO of Boeing to the Paris Air Show, has decided, understandably, that he will not be attending the event. He is going to be firmly focused on what is happening with the ongoing investigation, trying to understand why that aircraft crashed, one of his aircraft, and trying to get to the bottom of that story. So that is his focus at the moment. He will not be here. So both of these two events, the ongoing war in the Middle East and what has happened in India, I suspect, as I say, are going to cast a very long shadow over events here at the Paris Air Show. Jumana.
Yeah. Just as things were starting to turn around for Boeing. But of course, tariffs, we can't forget about tariffs and the economic situation there. To what extent do you think that is going to feature on some of these discussions and the impact it's having on supply chains?
So there's a whole series of things that are happening around this industry at the moment, Jumana, that are likely to make life more difficult. This is an industry that has struggled since COVID to get its supply chain sorted, to try and build the number of aircraft that the industry is demanding right now, that the carriers are demanding. But yes, tariffs is going to be one significant factor, a significant headwind. We don't know yet what the ultimate picture is going to be from the United States come the beginning of next month. We do have tariffs on aircraft going into the United States at the moment, 10%. That is what the number that Airbus is having to deal with right now. I was speaking to Larry Culp a few days back at the IATA AGM in India. He was talking to me about the fact that GE is maybe looking at raising prices. So the tariff story is one headwind. The other factor as well that you've got to bear in mind here, Jumana, is that we are seeing a significant decline in the value of the dollar. Most of the contracts in this industry are priced in dollar. And when you get big swings in the value of the currency, you are going to see some big changes. Airbus, for instance, could be significantly exposed to this. Citi posted a note the other day, 3.5 euros in value on the share price for every cent that moves, Joanna.
Something to bear in mind as well. Bloomberg's Guy Johnson, thank you so much for the preview. Well, that is it for Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Stay with us for Daybreak Europe.